Microstrategy is a US company that defies all convention when it comes to its assets. It's been investing heavily in Bitcoin. Now, while some people might call this crazy, it is useful for investors in the UK due to regulatory restrictions on ISAs and SIPs. So in this video, we'll see what MicroStrategy is doing, why MicroStrategy is useful, but also why MicroStrategy is risky. Today's video is sponsored by Trading212, a UK commission-free investment platform. So what is MicroStrategy? Well, here's their website, and if you were looking at it, you might be mistaken for thinking it's just a run-of-the-mill enterprise software company. And it's got some techno-babble that describes its mission. It says that it empowers every individual within a company with actionable intelligence. But if you look at the Q3 earnings report for 2024, this is how the company describes itself: the largest corporate holder of Bitcoin and the world's first Bitcoin treasury company. Now you can also see that split personality in the share price of MicroStrategy, and that's if we take the price history back to before 2000. Now you can see that in 2000 it was part of the dot-com bubble. Its price surged and then subsequently collapsed. And you could have just characterized the company as a kind of second-rate software company, and its share price was floundering for very many years after 2000. But then what happened, if you look at the share price after 2020, when it really starts to surge, is that it started to buy Bitcoin, and not just small amounts, very large amounts. Now, every company has a treasury department which is in charge of managing its cash reserves, for example, but also other aspects of the company's finances. And if they are going to park excess cash for some period of time, they'll tend to park it in very safe things, such as money market funds or perhaps government bonds. If they were really racy, they might invest it in equity, say. So that's why it was really shocking when MicroStrategy announced that it was going to invest its reserves into Bitcoin, which is extremely volatile. Now, as we'll see later, that introduces a risk to the company, but at the time it was seen as kind of crazy, but since then it's really panned out. So here are the Bitcoin holdings of MicroStrategy, and you can see that it's been growing very rapidly recently, such that by the end of 2024, it was holding about 2.25% of the total supply of Bitcoin. So if we were to value those holdings, assuming a price of about $92,000 per Bitcoin, it would be worth about $42 billion. According to the Q3 earnings report, MicroStrategy had long-term debt worth about $4 billion. So if we subtract the debt from the Bitcoin holdings, it's got a net asset value of about $38 billion. Now, the market capitalization of MicroStrategy is about twice that at $71 billion. So one way of looking at MicroStrategy, instead of being a software company, is an investment trust. So it's closed-ended. It is just a company with fixed capital, but one which buys Bitcoin as an investment. If we were to think in those terms, we could also think about a price to net asset value, ignoring all assets other than Bitcoin, of course. So in those terms, it would be trading at a massive premium. The market cap's about double the net asset value. So I guess you could argue that that's the wrong way to look at MicroStrategy, but I'd say that's actually a reasonable way of valuing it, because the software side of the company is not particularly profitable or valuable, as we saw in the share price before it started to buy Bitcoin. Now, if we plot the MicroStrategy share price versus the price of Bitcoin, you can see the two are fairly highly correlated now that its holdings are so large. In fact, MicroStrategy has outperformed Bitcoin over this period since 2023 by some margin. So MicroStrategy's return was about 350% over this 2-year period, and Bitcoin was about 137%. So some people say it's like a levered version of Bitcoin. You take an already very volatile investment, lever it up, and you end up with MicroStrategy. Now, how much Bitcoin is enough? Well, clearly we haven't reached that level yet. So if you look at those Q3 earnings again for 2024, MicroStrategy says we're announcing a strategic goal of raising another $42 billion of capital. That number 42 is very relevant, of course, because it's twice the amount of Bitcoin which will eventually be created. 21 million Bitcoin is the maximum that will be mined. And that's comprised of 21 billion of equity and 21 billion of fixed income securities. Now, I say that their plans panned out so far. What do I mean by that? Well, they've now been included in the Nasdaq index, and there is talk of them actually being included in the S&P 500 later on. So by almost any measure of success so far, it seems like this seemingly crazy strategy has worked. Today's video is sponsored by Trading212, a UK commission-free investment platform which I've been using for some time for my fund portfolio. For example, I bought Microstrategy stock on Trading212, and I've also got a UK small cap portfolio with 12 stocks in it, which I have as a pie. That means I can rebalance that portfolio with just one click. Also, I could also fund it so it encourages regular investing. And if I wanted to, I could copy other people's pies or publish my pies so that you could see what I'm doing. You can also copy pies created by professional fund managers. Now, zero commission means you don't have to pay for trades other than the usual difference between the buying and selling prices, and most impressive of all is that there's no annual fee for having an ISA and holding investments inside it. That's a fixed platform fee of zero. But if you do convert funds from one currency to another, it will incur a 0.15% FX fee. But just because it's low fee doesn't mean it's not innovative. Far from it. Trading212 for example, is a multi-currency account that allows you to hold money and trade in multiple currencies. This means you no longer have to convert money and incur FX fees every time you trade in a different currency. The Trading212 card lets you spend the uninvested cash in your invest account, and that's general investment account, not your ISA. You can earn 0.5% cash back on spending up to £20 a month, and if you use your card abroad, you can make use of Trading212's card's zero FX fee and its very competitive currency conversion rates. And you can spend in 13 major currencies. You'll also earn competitive interest on cash in those currencies. ATM withdrawals are free, and there are no monthly fees or subscription plans, just a $4.95 upfront charge to get the physical card. Now, viewers of PensionCraft have a special offer from Trading212. You can claim free fractional shares worth up to £100. Just open an account, verify it, fund it, and then use my name as the promo code, which is RAMIN, RAMIN, and you'll find a link to that offer in the description below. So why is it that MicroStrategy is useful? So UK investors, while we can't invest in cryptocurrency directly, we can invest in things which are highly correlated with cryptocurrency. So for example, if we want Bitcoin exposure, we can buy MicroStrategy shares. Now you can hold foreign shares of companies inside an ISA or a SIP. However, there are certain constraints. For example, it has to trade on a recognized exchange. Now, all the US major exchanges are in that list from HMRC, including the Nasdaq, which is where MicroStrategy trades. Consequently, MicroStrategy can be held in an ISA, a SIP, or a general investment account. So this is why MicroStrategy is useful for UK investors. We can hold it, and it gives us indirect exposure to the price of Bitcoin. Now that does come with its own risks. So why is MicroStrategy risky? Now, holding any single stock is very risky because it comes with its own idiosyncratic risks. Remember, as an equity holder, if the stock goes bust, you lose everything, every penny. Plus, even if it doesn't go bust, the price is very volatile if you own a single stock. And if there is some piece of news which is specific to that company which is seen as negative, it can very dramatically affect the share price. All your eggs are literally in just one basket. And one common measure of risk for owning a single stock or any investment is called volatility. This is the typical annual percentage price move. Now, volatility does vary over time. Here what I've done is I've plotted the volatility over a 3-month window for Bitcoin, but also MicroStrategy. So Bitcoin is in the top panel and MicroStrategy is in the bottom panel, and this data goes back to just before 2018. And there's an interesting pattern here, which is that Bitcoin has gradually become less volatile. It's still around 56%, that's very high. For a typical stock index, it would be below 20%. But look what happened to MicroStrategy. The vertical dashed yellow line here shows you when it started to buy Bitcoin. And that's when its volatility shot up from around 15–20%, which is fairly typical for a tech stock, way up to 108% over the last year. So in fact, its volatility is almost double that of Bitcoin. Now, why does volatility matter? Well, remember that things go down as well as up. And if there is a big crash, more volatile investments tend to crash more than things which are less volatile. Now, you're probably thinking, what are the risks that go with MicroStrategy holding so much Bitcoin? Well, remember why a company goes bust. It's because the value of its assets are lower than the value of its liabilities. And if the value of its assets is very volatile, well, it's more likely to cross that threshold and go bust. To be fair, MicroStrategy is trying to move away from having debt on its balance sheet, so its liabilities may well go to zero. So that would remove a lot of the risk that it's facing because of the volatility of its Bitcoin. But what we can do is to take its Q3 numbers and try to figure out exactly how risky it is. What's the probability of default? Now, there's a model called the Merton model, which has been around forever, since the 1970s, which uses all the mathematics from option pricing and tries to figure out the risk of a company going bust. But the basic idea is that if your assets are volatile and the value of those assets falls below the value of the liabilities, then that would constitute a default of the company. So if you've got very volatile assets, it increases the probability of that default. So what I've done is for the NASDAQ 100, I've taken all of the stocks in the index and tried to figure out using the Merton model their probability of default as measured by their credit spread. So if they issue a bond, what additional premium should you get paid in order to take the credit risk of that company? The bigger the risk of default, the wider the credit spread. And you can also back out a probability of default from that spread, which is what we're going to do for MicroStrategy. Now, I've only plotted the companies in the NASDAQ which have a spread greater than 10 basis points. And you can see that MicroStrategy is number 2 in this list, so very risky for a company with such a large market cap. In fact, its spread is about 600 basis points, just under. If we turn that into a probability of default using certain assumptions, then there's a 1 in 10 chance that it's going to go bust in the next year, and a roughly 1 in 3 chance it'll go bust in the next 5 years. Now that does sound pretty alarming, but remember the reason for it is the huge volatility of the Bitcoin on its balance sheet. If it did get rid of all of its debt, that probability would be much, much lower. Now we can also look at the debt rating for MicroStrategy, but of course once it did retire its debt, it no longer needed a credit rating. But just before that credit rating was taken away, it was rated B-, which is junk territory by S&P. Now those credit ratings also come with a probability of default, which for a B- rating is about 3% in 1 year and about 17% in a 5-year period. Now those are much lower than the estimates I came up with, but mine were based on the latest data from MicroStrategy, but it is a very simplistic model I used. So is MicroStrategy risky? Yes. Could it go bust? I think so. Yes, it could. But is it useful? Yes, it is, in order to buy this exposure to Bitcoin's price. But it's a kind of crazy situation in which the regulators forced us to go from something which has a volatility of about 60% to a volatility twice that in order to be able to buy this exposure in our ISAs and SIPs. I'm not sure that was an intended consequence. Now, I've said I'm not a huge cryptocurrency fan. I do think cryptocurrency is a Ponzi scheme, but that doesn't mean I don't invest in it in my fund portfolio. I certainly wouldn't put it into my core portfolio. Now, my core portfolio makes up 90% of my investments. That's invested in just one developed market equity fund, which is very low fee, but it's not fun. So I do play around with investments in my fund portfolio, and one of those investments is this MicroStrategy stock, although I dip in and out according to whether I think it's got much upside at a particular point in time. Now, of course, this isn't a recommendation. Personally, I'd be very cautious about investing in MicroStrategy, certainly large amounts, but that's why I think it is useful for UK investors, and certainly that's what many people use MicroStrategy's stock for. In fact, some people buy levered ETFs, which give you exposure to MicroStrategy, but they double or triple the daily return of MicroStrategy's stock, which is even more risky, and I'd certainly never touch that. Now don't forget our offer from Trading 212. You can claim free fractional shares worth up to £100. To claim that, just open an account with Trading 212, verify it, fund it with at least £1, and then use my name as the promo code, so that's RAMIN, or use a link in the description below. And, as always, thank you for listening.